Welcome to Word on the Street. I'm Alex.
And I'm Elena. Great to be here. We're diving into a really interesting batch of sources you sent us, all focused on, well, one of the biggest tech events of the year, right? Apple's WWDC back in June 2025.
Yeah, and it's a real mix. We've got market analysis, analyst ratings, deep dives into what Apple actually showed at the conference, and even some, candid chat from online investor forums.
Yeah.
Gives us a pretty full picture.
Definitely. And our mission today really is to unpack all of that for you. What did Apple actually present? How did the market react right afterwards based on these sources? And crucially, what are the bigger factors influencing Apple's stock and its future path? We want to pull out those key nuggets for you.
Get ready, because it's a deep dive with a fascinating, almost immediate contrast. You've got these cool product reveals on one hand, and then this quite different investor feeling swirling around Apple right now. Let's get into it.
Okay, so kicking off with WWDC itself. According to several sources, the expectation was maybe, Apple finally going all in on the AI arms race this year. Right.
But instead, it seems they kind of took a step back, emphasized beautiful, functional software, almost like getting back to their roots a bit.
And you really saw that, didn't you? And the biggest visual thing they announced. This whole new design language, liquid glass.
Exactly, liquid glass. Sources describe it as sleek, translucent, dynamic.
Yeah.
Clearly pulling from that Vision Pro aesthetic, right?
Yeah, you can see the connection.
And it's being called Apple's first true design overhaul since iOS 7. So, a big deal. It signals they're betting on, let's say, elegance and usability, maybe not just flashy AI demos, more about polish.
Makes sense. Polishing the core experience.
Precisely. And you see that refinement focus in the OS updates too.
Yeah.
Like for the iPhone with iOS 26, it wasn't necessarily about headline AI features, but smarter ways the phone works day to day.
Like what specifically? What were the useful things people might actually notice?
Well, sources mentioned stuff like a unified phone and FaceTime UI, just making it smoother.
And this feature called call screening, which sounds pretty clever actually. It waits for the caller to talk before your phone rings, cuts down spam.
Oh, okay. I like the sound of that.
And hold assist, where the phone literally stays on hold for you.
Okay, call screening and hold assist. Those sound genuinely practical. What else stood out?
They made lock screen widgets more dynamic, scalable, some fun music stuff like live lyric transliteration, auto mix. Oh, and a dedicated games app. Finally.
Yeah, bringing it all together.
Right, better co-op support, controllers. The overall vibe for iOS, based on the sources, was tighter integration, smoother workflows, features people will actually use. So less revolution, more thoughtful evolution, polishing the experience, adding useful tools. What about messaging? Sources hinted at a subtle lean into AI there.
Yeah, that's where some AI did creep in, but again, very practical. Things like easier Apple Cash requests and receipts right in the chat. And group chat polls, finally.
Took them long enough. Tell me about it. And they improved Genmoji, their AI emoji things, making them smarter, more expressive.
And live translation. That works across devices now. That sounds pretty useful.
Right, even if the other person isn't on an iPhone. It's framed as practical intelligence for everyday life, solving common issues without a big song and dance about AI.
Okay, moving on from the iPhone, iPadOS 26.
Sources say it's continuing that trend, making the iPad more like a computer. The massification thing.
Absolutely. They added a new window system, clearer grab handles, an expose-style preview, like on the Mac.
Right.
And a persistent menu bar. Makes it feel much more like a traditional desktop. Plus, key Mac apps like the Proper Files app and Preview are finally on iPad.
And tweaks to Stage Manager and external display support, too.
Yep. Sources see this as Apple really pushing harder into hybrid laptop territory, making a stronger case for, a high-end iPad, maybe replacing a laptop for some people.
Makes sense. And macOS Tahoe 26. Same design language. Yeah, got the liquid glass treatment, too. Plus the usual OS refinements, better spotlight, smarter shortcuts, the phone app sharing history across devices. Pretty standard stuff, but polished.
And a gaming app for Mac, too.
Yeah.
Using Metal 4 graphics.
Right. The theme for Mac, according to the sources, was consistent. Optimizing performance and utility, not chasing buzzwords.
Seeing a pattern here.
Definitely. Even for visionOS 26, the Vision Pro update, it was about quietly maturing the ecosystem, aiming for that long-term play. They added persistent widgets in your space, spatial photo rendering, new privacy stuff like eyes only.
And support for things like the Logitech stylus and actual Premiere Pro editing.
Yeah, building out the platform piece by piece. incrementally.
Okay, and just briefly, watchOS and tvOS, what was the story there?
watchOS got Workout Buddy for coaching, smarter notification volumes, more wrist flick gestures. tvOS improved resuming shows, added a karaoke mode using your iPhone, redesigned FaceTime. Again, sources summed it up as the usual Apple playbook. Unify the experience, reduce friction, enhance delight.
Okay, so if we just look at what Apple showed, the sources paint a picture of WWDC focused heavily on design, practical features, ecosystem integration, incremental improvements, with some, let's say, practical AI woven in. Seems solid, right? User-focused.
That's certainly how it looked on stage. But here's where it gets complicated, because the sources tell a very different story about the market's reaction, especially around Apple Intelligence.
Yeah, the AI story. Or maybe the lack of one, depending on how you read it.
Exactly. Sources are pretty explicit that Apple pulled back on its AI promises this year. That big Siri overhaul everyone expected, still in progress, likely not launching until 2026 or even 2027, according to these reports.
Wow. Okay, so the lightweight AI we just talked about, polls, translation, Genmoji, that was basically it for this year's new AI.
That seems to be the gist from the sources. And that, apparently, is where investor expectations just didn't align. One source says flat out, investors expected major breakthroughs, but reactions were mixed. The feeling was, the upgrades didn't go far enough, especially compared to Google and Microsoft.
Didn't match the rivals. I think one source even quoted Barron saying something like, even low expectations weren't met.
Yeah, that quote really stood out. Investors had low expectations, but even those weren't really met. It really captures that sentiment, from some perspectives anyway, that Apple is still playing catch-up in the whole generative AI race. Rivals made much splashier moves.
Which brings us right to the market reaction. What did the sources say happened to the stock price during the keynote itself?
Well, according to the Economic Times source, the impact was pretty immediate and negative. Apple stock slipped 1.5% right after executives took the stage.
Wow, that fast. Do we have specifics on the numbers?
Yeah, shares apparently dropped from about $204.34 at the open down to $201.42 by the afternoon. So down about $2.50 or 1.23% for the day. It hit a low of $201.42.
And that source, the Economic Times, they directly linked that drop to the AI announcements.
Yep, their conclusion was pretty clear. The stock market reaction appeared tied to Apple's long-awaited moves in artificial intelligence, which many viewed as too little, too late.
Okay, so that connects the dots. Investor disappointment on AI translates to a price drop.
And this wasn't just a one-off bad day, right? Sources noted this fits into a tougher year for Apple stock overall.
That's right. Year to date, these sources say shares are down somewhere between 16% and 20%, which they point out is a sharp contrast from previous years when Apple was a much more consistent gainer.
So as part of this bigger picture, where Apple hasn't really joined the big tech rally this year in the same way, one source mentioned a perception issue may be contributing.
Exactly. Apple's still a giant, right? $3.28 trillion market cap. But sources suggest its cautious approach to AI has left some investors frustrated, especially when you see other big tech names getting big valuation bumps, partly because they're pushing generative AI so hard. It's also interesting, wasn't it, Investopedia, according to one source, that noted the market was already expecting some kind of swing.
Yeah, that's right. Options pricing before the event apparently suggested investors were already braced for maybe a 3% to 4% swing, either way, based on whatever Apple announced.
So a move was expected, but the reason for the downward move seems pretty clearly tied to that AI reception.
Which kind of leads us perfectly into the broader sentiment around Apple and what the analysts are saying, which, as you'd probably guess with Apple, is pretty mixed, according to these sources.
Let's start with that idea of investor sentiment. What is that exactly? Why does it matter for a stock like Apple?
Well, one source cites the American Economic Association defining it as basically a belief about future cash flows and investment risks that is not justified by the facts at hand. The key word is belief.
Right, perception.
Exactly. It can really move prices, especially for huge, complex companies like Apple that are kind of hard to value perfectly just on numbers alone.
So it's less about today's balance sheet and more about the market's feeling about tomorrow.
Pretty much. And looking at Apple specifically right now, the macro-axis source suggests many investors are alarmed. Their indicators showed new sentiment as neutral, but hype sentiment as bearish, and insider sentiment leaning towards disposing, meaning insider selling.
Okay.
And interestingly, they noted about 56% of Apple's investor base is apparently looking to short the stock, betting the price goes down.
Wow, 56%. That's notable. Though sentiment isn't a crystal ball, is it?
No, definitely not. As MacroAxis itself points out, it's not a perfect predictor on its own, but it can be useful maybe for timing when you combine it with other analysis.
What about other psychological things affecting the price? That FX open source mentioned a big name.
Yeah, Warren Buffett. They highlighted the news that Berkshire Hathaway had halved its Apple position. Now, that doesn't directly change fundamentals, but seeing a legend like Buffett sell can have a big psychological effect, right? Especially on retail investors.
Makes sense. Follow the leader effect.
Yeah. And they also noted the stock breaking below $200 was a psychologically important level for many.
Okay, so we've got this cautious, maybe even bearish sentiment floating around, driven partly by AI disappointment, partly by psychological factors like Buffett selling. But what about the pros? The analysts? Sources showed conflicting views there too.
They really did. On one hand, you had a tip rank survey probably done before this immediate WWDC reaction, showing most analysts, 24 out of 32, were actually recommending buying Apple.
Really?
Yeah, with an average 12-month price target up around $248.96. Pretty bullish.
So plenty of pros were still seeing upside, at least before this latest dip. What about technicals? FX Open had a view there.
Their technical analysis, again pre-WWDC, saw the stock in an ascending channel since May. That's often seen as a positive chart pattern, and they identified potential support levels.
And even earlier, back in April, Guru Focus and Bank of America were sounding positive too.
Yes, they flagged a favorable risk-reward when the PE ratio dipped below 25. They had a bullish $250 target. Guru Focus had estimated a fair value around $207 when the price was near $170, suggesting it was undervalued back then.
Important context, right? These earlier bullish calls kind of set the stage.
Right, set a higher bar, but then came the WWDC reaction and the drop. Did the analysts flip after that, turn bearish?
Not all of them, interestingly. A CFRA analyst quoted in the Economic Times and mentioned on Reddit actually stayed bullish even after the negative WWDC stock reaction.
Okay, why?
Their reasoning focused on Apple's long-term advantage in personal AI through its tightly integrated ecosystem and the huge monetization potential from both services and hardware. Their take seems to be the value is still there, just maybe be patient. They mentioned a 6-9 month wait, perhaps.
So professional opinions remain divided, some sticking to the long-term bullish case despite the AI wobble. How does that compare to the chatter from, like, everyday investors online, the Reddit source? Similar mix, maybe even more polarized, you know? Some Redditors are pretty down on Apple, seeing the AI lag as a trap, calling Apple a long-term loser. Pretty harsh stuff.
Ouch. But others are taking the opposite view.
Absolutely. Lots of people gutting long. They point to the insane brand power, that massive cash hoard, over $165 billion, which Apple could use for a big AI acquisition, maybe.
Good point.
And the idea that sentiment can turn on a dime if future updates impress.
Any technical talk there, too. Chart watchers.
Yeah. Discussion around $200 holding as solid support. Talk of a potential double bottom pattern forming around $193. That's another chart thing some see as bullish. Maybe pointing towards $225 if it plays out.
But you also see the other side, right? People saying they're selling Apple, buying Google instead.
Definitely. And that observation we touched on earlier comes up too. Apple has been somewhat left out of the broader market rally this year, hasn't climbed back to its 200-day moving average like some other big tech names.
Okay, so we have this immediate post-WWDC dip linked to AI. We have mixed sentiment overall, conflicting analyst takes, some still bullish long-term. What are those longer-term factors they're looking at beyond just one conference?
Well, the Cleverance and Forbes sources highlight some big potential growth areas. Expansion in huge emerging markets, obviously. China, India, that's still a huge opportunity.
Right.
And the continued growth in services and subscriptions. That's really key. Much higher profit margins than selling phones, right? And it's recurring revenue.
Yeah, steadier income stream.
Exactly. Forbes noted services are over 25% of revenue now, maybe hitting $180–200 billion by 2030, with gross margins over 70%. That's a massive cushion if hardware sales slow down.
Plus innovation in wearables, maybe augmented reality down the line.
Yeah, those are listed as drivers too. But the same sources also lay out the big risks. Competition isn't going away. Samsung, Google, Huawei, they're always there.
And the smartphone market itself, it's just not growing like it used to, is it? People keeping phones longer.
Exactly. Market saturation, longer replacement cycles, that's a headwind. Plus, supply chain risks are always there. And then, the big one, regulatory scrutiny.
The antitrust stuff. App Store rules.
All of that, globally. The EU's Digital Markets Act, the US DOJ lawsuit. Analysts cited in the sources think these could potentially hit Apple's earnings by maybe 7–9% if they're forced to make big changes.
So real potential impact on the bottom line there.
Definitely. And Forbes actually tried to put numbers on this long-term view. Their base case scenario sees Apple stock maybe around $350 by 2030. That's like a 7–8% annual return, assuming about 6% revenue growth a year.
Okay, sort of steady, but maybe not spectacular growth. What about a bull case?
Their bull case goes up to $450–500 a share, so maybe 12–15% annual return. But that needs a lot to go right. Success in totally new areas like spatial computing, maybe cars, big AI service wins, and continued strong iPhone growth. That's a high bar.
And the bear case, if things go wrong.
That puts the stock back down in the $180–220 range. That could happen if market saturation really bites, regulations hit hard, or they fail to launch the next big thing.
But despite all those risks, Forbes also really hammered home Apple's core strengths, didn't they?
Oh yeah, the fundamentals are still incredibly strong. That brand loyalty, the ecosystem, it's immense. Over 2 billion active devices. And like 90% plus iPhone user retention, that stickiness is just huge.
Hard to break into that. And the money.
Massive R&D spending, $30 billion cited for 2024. They can create new categories, they've proven that. And the sheer amount of cash they generate, $115 billion free cash flow annually, estimated. Gives them so much flexibility for R&D, acquisitions, buying back shares.
Right, they reduced shares by 3.5% in the past year alone through buyback.
Which helps boost earnings per share. So the foundation is solid.
Okay, so bring it all together. How do these long-term strengths and weaknesses stack up against that immediate kind of negative WWDC reaction we saw?
Yeah.
What does Apple's strategy focusing on ecosystem design, practical AI, not the flashy stuff mean for them going forward?
It really makes you wonder, doesn't it? Was the market's disappointment just a short-term reaction to missing a specific type of AI demo? Or does it signal something deeper? Apple seems to be betting that owning daily usage through that tight integration and useful features is the winning long-term strategy, even if it doesn't grab headlines like a new chatbot might.
And like one source said, maybe focusing on dominating daily usage through great integrated products. Maybe that's what great investments are actually built on, long-term. It suggests Apple's playing the long game, right?
Yeah.
Even if the market reacted to the sprint.
So pulling together everything from these sources, the solid, practical WWDC updates, the market's quick negative reaction tied to AI, the mixed sentiment online and among analysts, the underlying long-term strength and risks. Here's maybe a final thought for you, the listener, to chew on.
Given that the market seemed disappointed by Apple's more measured, ecosystem-focused AI path compared to rivals' splashier moves, maybe the question for you is this. In the big race for future tech dominance, which strategy the flashy sprint for generative AI headlines we see elsewhere, or Apple's integrated, practical intelligence long game built on that powerful ecosystem is ultimately more likely to create lasting value, even considering the immediate word on the street reaction we just discussed.
Definitely something to think about as you weigh up all these different pieces of information.
Absolutely. Thanks for joining us for this deep dive on word on the street.
We'll see you next time.